Good afternoon, everybody. Welcome to Trending Thursday here live on YouTube. Sorry for the delay. Something happened, but that's why I have Joey in the background to help a man out when something like this happens. So I appreciate that. If you can hear me, by all means, in the chat, please respond with VV Nation to let me know that everyone can hear me loud and clear. All right, we're going to get started. Can't nothing slow me down. Ain't nothing going to break my stride. Ain't nothing going to slow me down. That's right, because that's what it's all about here on Trending Thursday here live on YouTube. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. I've been with VectorVest now for about 16 years, helping people just like yourselves utilize the VectorVest software to make money in the market. Today, I have an extremely special guest who is on our YouTube content hosting Fantastic Female Fridays. Her name is Susan Hayes Colton. She's going to be my guest today. Joey's going to bring her up on the screen. It's my pleasure to have her here. I played a small role, just a small role in helping her to understand the VectorVest software when she first came on board. So it is definitely my pleasure to introduce her. And now what I'd like for her to do is talk a little bit about herself and the content that she shows here on our YouTube channel. Susan, it's all yours right now.
Hello, VV Nation, and how are you all doing? So, yes, it's Susan here, back to you. Thanks so much, Glenn, for the opportunity to be here as part of the show. So last time I was here with you, I was telling you about Fantastic Female Fridays that was going to be launching. So we are now right into the middle of that show, and it's taking place every 2 weeks on Friday at 12 noon Eastern Time. So what we do is that we focus on investing in a way that suits women in the very best way. So anybody who was on this show the last time I was here, you'll know that women tend to trade less. They tend to stick to a strategy more, and they also tend to actually get better returns. On the other hand, men tend to be in the market more. They will rebound faster from trauma. And also they tend to be more, they tend to focus on more short term, whereas women take a longer term approach. So what I do is that I take the natural edge that women have, and that I focus that right into how they can increase their ability to generate return, manage their risk, and of course, understand themselves better as well. Now, part of that also involves a special type of element to do with personal development. And personally, Glenn, I have been working on being the best version of me since I joined VectorVest. I didn't realize we were actually so close in VectorVest age. So I am with the company now for almost, next month, 9 years. And over that period of time, I've worked a lot on ways in which that I could improve my abilities within my career, within my investing, and within myself. So what I've been doing over the past couple of weeks is sharing with our Fantastic Female Friday audience just how I've done that. So for example, I've shown them a methodology to improve their motivation. I have also shown ways in which that you can take on limiting beliefs and overcome them. And now tomorrow, what we're going to be talking about are setting effective goals, because Glenn, one of my biggest bugbears is when people set a goal and then unfortunately they'll never know if they actually reach it. So if we could take an example of that, I might say that, you know what I'm hoping to do this year? I'm hoping to be able to read the market better. The thing is, Glenn, how am I going to know if I'm going to be able to do that? Whereas on the other hand, if they said, okay, I'm going to try to get to Trending Thursdays twice a month. And what I'm going to do is I'm going to implement at least 2 of the stocks or 2 of the strategies that Glenn talks about. And if I don't implement them, then I'm going to research them and get to grips with understanding of how to do that. Then at least, you know, it's more measurable. So what tomorrow's show is going to be about is that we're going to focus on exactly that, setting effective financial goals, and how then that can weave into all the various different areas of your life to be effective, and also then how we can use VectorVest to optimize them. But of course, today, the reason I'm here with you is I've got a lot of opinions on an awful lot of what's going on right around the world right now. Really excited to be part of this show today and to share some perspectives with you from somebody who lives in Europe. So I'm based in Dublin in Ireland, and I love the States, love when I get to be over with you all in North Carolina and Ohio. But I'm going to share some perspectives on what's happening in the European markets, the European view of what's happening in the US markets, and also because my favorite way to transact within the market is actually through options. So I'm also going to take a look at some options trades that I've personally taken over the last while, and I'm going to bring you up to date on those, give you some other perspectives on what you're going to talk about, and I'm ready to delve right in.
All right, with that, I'm going to really enjoy, and I think we're going to enjoy having the perspective of what's going on, even outside of the United States, in the European market. I think you bringing that to this presentation is going to be priceless. So, in case you did not know, we do track markets other than the United States and Canada. We track the UK, we track Europe, Singapore, Australia. I'm probably missing something, but we are well-rounded. I think we cover just about all the continents, so that's a good, do we not? I think so. And if we don't, we will. All right, so with that, we always start off the week or the session with what's going on in the market. So we do a bit of a market overview. And we're going to start off right there today. Which one do I want, Joey? Yeah. I just want to start here with the market overview. There we go. So we can see the both of us. And we always start off with what's going on in the market. So today, looking at our homepage in the VectorVest software, all of the major indices are down, which is kind of interesting, especially knowing that two big stocks hit earnings yesterday. When we looked at Microsoft, we looked at Tesla, both hitting earnings yesterday. You would think that would be a bump up in the market. One other thing happened, though. Unemployment number was a little higher than what was anticipated, and that's the first time since March that has happened. I think that with the reopening going on, it affected a lot of the cases of COVID-19. In case you've been living under a rock, we are in a pandemic. And, that I think is affecting the market adversely as well. But all of the major indices are down, with the NASDAQ leading the charge to the downside, down almost 3%. But as a VectorVest subscriber, we should not have been blindsided by a day like today, because as I move over to our color guard, the market timing indicator, or MTI, is still searching for a top right now. The market, even with a lot of the bullish days coming in, have been telling us to be careful, to be cautiously bullish. And not being a VectorVest subscriber, you won't get that kind of information. So for many of you who are here, one, thank you for being here. But if you're not a part of the VV Nation or have a subscription to the VectorVest software, Joey is going to put a link in the chat for you guys to take advantage of the VectorVest software for 30 days for an outstanding price of 99 cents. So for many of you who want the insight as to what's really going on in the market, click the link, take a trial, all right? So as I look at our color guard, which is our traffic light into the market, a lot of yellow. When you get to a yellow light, what do? Joey speeds up, right? Because Joey doesn't know. Oh, by the way, say hi, Joey.
Hi, Joey.
Hi, Joey's my producer. Joey said he ain't got no time for that. He doesn't slow down, but as an investor, you should be slowing down in your trades. What does that mean? That means if you're going to put money in the market, do it sparingly. Still take advantage of the up days. That's okay. If you're still long in the market, tighten stops. All right? Don't let a day like today catch you off guard where you say, holy smokes, what just happened? Don't worry about that. Take what the market gives you and have a plan in place. Your plan lets you know when to buy, what to buy, and when to sell. So as we look at all of the yellow in the color guard, the MTI looking at a level of a market top, keeping those things in mind, let's go find out what's making the market do this as we go along. Now, Susan, do you want to add a little bit more about what's going on in the EU market as of right now?
Yes, I will indeed. Can I just first of all pick up on those figures that you mentioned about the unemployment, because I think that that's a real point that needs to come up here, and that is that when we take a look at the amount of payroll that the US lost, I mean, there was a record loss of 20.5 million payrolls in April, and the US actually added a combined number of jobs of 7.3 million in May and in June. And then there was also, that was followed up then by a surge in retail sales that was up by 7.5%. And that was followed by an 18.2% increase in May. So really there was a lot of momentum here. Obviously there was a significant amount of conversation around a potential vaccine. The world looked like it was opening up again. So you can see why there was quite a significant push in the US market. Now, this time around, though, we've had the first decline when it comes to jobless claims, an increase when it comes to jobless claims. And that is that the jobless claims rose to 1.42 million seasonally adjusted in comparison to 1.31. Now, that's a very significant figure because the trend of all of that was happening from the top, from March right down. Now, from the US or from the European perspective, I just want to mention a couple of things, Glenn. First thing is we had a really big story that happened this week, which is that our European Union leaders signed off with a 750 billion euro stimulus for the European Union. And then that means that in addition to the amount of money that the countries individually are borrowing, like we're borrowing in Ireland 30%, or 30 billion, which is a huge amount of money this year to pour in to the economy as a stimulus. And of course, everything that goes into the economy can then also be recycled back into the stock market. So what I thought I would do actually is thought a good way in which to take the temperature both sides. Let's take a look at both sides of the Atlantic here, Glenn. Let's compare me and you in our respective markets.
Okay.
I write my views for VectorVest Europe every single week, and here's a sneak peek for anybody who has got the European database. Here's what I wrote about this week. I compared the buy-sell ratio, relative timing, and the percentage where the VectorVest composite is currently relative to its peak. And let me tell you where we're at. In the US, as of the last time I checked on real-time data, the buy-sell ratio is at 2.77. In Europe, it's the 2.73. Yesterday, Glenn, it was over 3. So the thing is that now we can actually see that steadying off where, particularly from a buy-sell ratio point of view, we're pretty much the same. Our relative timing in both of our respective markets is practically the same. You're at 1.09, we're at 1.1. And here's the difference between us though, is that the US market, and when I mean the market, I mean the VectorVest composite. When we look at VVC, the US currently is at 93% of its peak, whereas in Europe, we're at 86% of our peak. So if we're to compare solely from where we came down from, Europe has got some way to go. And just to finish this off before we go back to you, the UK, I just wanted to add in a piece of analysis from there too. The buy-sell ratio there is at 2.45, but lower than both of us, Glenn. The RT is exactly the same as Europe at 1.11, but its percentage from its peak is at 91%. So it's actually closer to the US. It has got back 91% of where it was at its top. So when we look at the market from a global point of view, I just think that it's interesting to look at whether the buyers or the sellers are winning the battle of today and why, and also how much in comparison to back at the March peak when we look at payroll in the US, or whether we look at the markets in general.
So take all of that into consideration. The uninformed investor is the one that's just looking at, hey, the market's going up without understanding what's going on behind the market. The big jump in the payroll or lack or increase in people looking for a job, that's big and it weighs heavy on the market. Knowing where we are in respect to our most recent high, and getting close to that level again, what do you think is going to happen? We're not in uncharted waters right now. We have a temperature gauge to look at, and the closer we get to that, what do you think is going to happen? Well, if history is going to repeat itself, we're going to pull back again. The issue is not if we're going to pull back, it's when we're going to pull back. And looking at the VectorVest software, no matter what country you're in, we're giving you the telltale signs of this is a time to be careful. That MTI ratio or that MTI indicator is a very important indicator to help the people who are part of the VectorVest family to understand this is a time to be cautious in your investing. Looking at the news that's going along, all of that news is going to affect or is going to be a part of what makes the market move or don't move, and we're going to start getting into those stories. Thank you for that, Susan.
What I'm just going to say on that is I would be the same as you in thinking that, we need a new push, Glenn. We need some reason to drive forward. You mentioned Microsoft, you mentioned Tesla. And the thing is that we're mentioning single companies here that have met or beaten their expectations. And I can certainly give you some examples from Europe again. But the thing is that what's driving growth? In essence, what are we talking about? Is it going to be earnings? Well, I don't really think en masse we're going to see a huge amount of earnings. We mentioned the jobless figures. Jobless figures ultimately mean that people don't have money to spend, which means they can't contribute to the profits of companies. And we know what happens from there. Okay, so then we can also talk about, well, what about borrowing then? Yeah, okay, for sure, companies can borrow. And then what are they going to do with that money? Because we know over the past couple of years, there's been a huge amount of corporate borrowing and share buybacks. That's driven, you could say, the latter end of the bull market. Okay, so maybe if we take that out of the equation, maybe it can still happen, but to what effect? The key thing here, though, Glenn, is who's buying. And the ECB, that's the European Central Bank, the Fed, they've certainly opened up their pockets and poured them right into the markets. We know that there may not be any end to that. But we do have to make sure at the end of the day that we are seeing that the stock market isn't a poker table. It's not a global casino where money just circulates around. At the end of the day, the stock market is buying pieces of companies that have to grow in earnings over time. And I don't really see what can really push on earnings apart from certain sectors in the economy. Again, we can talk about that. Or unless there is complete disruption in certain areas, particularly technology and healthcare might be driving that. If there's a vaccine, of course, and that comes early, again, we can maybe see some restoration when it comes from that. And that's why, Glenn, that's why I'm selling out of the money puts on a range of stocks at the moment, as opposed to simply buying stocks in the hope that they're going to rise, because we need another push. And at the moment, I'm not seeing it. That's why I would be pretty similar minded, slightly taking different actions, but pretty similar minded to where you're coming from.
All right. Well, that leads me into my first story as I open that up. Because what moves markets? Let's go to my first story. What moves markets? You scroll down. Well, earnings, interest, and inflation. Everything that Susan just talked about, still earnings is the big portion of that. Earnings, interest, and inflation. And what is the Fed? The Fed's playing a role. As just like Susan said, the Fed is spending money. The Fed is allowing themselves to open up all of the spigots to allow them to help to buoy the economy. So here's the story. Fed deliberates how and when to roll out more economic support. This is the Fed trying to keep the market going. I've used my Forrest Gump analogy on the market for quite some time now. When Forrest Gump was running, and all the people were running behind him because he was being spurred on to run. Right now, that's what the Fed's doing. The Fed is the guide behind the market to say, come on, market, run. And then at the end, what did Forrest Gump said? He says, I think I'll go home now. And that's what at some point in time, the market's going to go, I think I'll go home now. And it's going to start running the other direction. So in this story, the Fed deliberates how and when to roll out more economic support. And just the headline in and of itself is telling that the Fed is trying, between the Fed and the government, Congress is still thinking about putting out another stimulus. I saw another story about that as well. And I'm going to wrap that up into my next story, which is when you look at unemployment, as $600 a week jobless aid nears end, Congress faces a quandary. So right now, I saw a story that said the Congress was saying, all right, we got another stimulus out there. But I don't know all of the exact details behind it. I saw some stories that said the only people that will get more money are the people who are making $40,000 or less. Or the one that we just had was if you made $70,000 or $75,000 or less. So depending on what's going on, how they structured the next stimulus, we'll see how that ends. But right now, Congress is in cahoots trying to get that done. But this $600 a week jobless aid, a lot of people weren't willing to go back to work even when we started reopening because they were saying, I'm making more in unemployment than I was in my real job, which actually causes a problem to a certain degree. But We were trying to make sure that people were able to pay their bills, pay their rent, buy food. At this point in time, a lot of, if you rent, I don't think you can get kicked out of your house right now if you don't pay rent. I think people who own houses are being able to not pay mortgages, and it adds it on to the end of your existing loan. So it's a lot of things going on, as Susan just said, to try to keep the economy afloat. We still have the best dollar compared to everybody else around the globe, which is making us stronger. And we're the ones, even though getting to recessionary points, we are the least recessionary, for the lack of a better word. But as you've been watching the weekly presentations, we are in a bear market scenario right now. So a lot of things are going on, but the Fed is behind this. This is, in my opinion, still, for us, a Fed-induced market. This is really a Fed-induced market, but earnings is going to play a role. And this is the quarter that earnings is really going to come to fruition and tell the real story. Because the coronavirus hit earlier this year. This is now the second quarter after that happened. We're going to now see the ugly picture of earnings, and it's going to come. And when earnings keep on going down, we're going to stay in a bear market. Thus, the onslaught of a pullback in the market is there. It's not if it happens, it's when it happens. All right, so those are my two stories specifically dealing with what's going on in the market. And what I'm going to do, I take what Susan said, and she actually was able to segue into the stories that I'm talking about right now. So her insight is right on point, and this information is there. Go ahead, Susan.
A couple of points I just want to make on that, Glenn, is that I just noticed there in the comments that a couple of people were saying, well, one person mentioned that it's the same in Canada. So I've been looking into this, and if the $600 a week continues right up until January of next year, around about 5 out of 6 people in receipt will have been receiving, in its current form, will have been receiving more than previously when they were employed. Now, there's two ways of looking at that. One way of looking at that is that people on lower incomes, they have got what we call a higher marginal propensity to consume, right? So that means that for every extra $100 that they get, they're likely to spend more of that, which ultimately is what local communities need. The hairdresser needs it, the nail salon needs it, the restaurant needs it, assuming they're open, of course. So that's one way of looking at it. But on the other hand, as you say, it does, and as a number of people have pointed out, it does act as a disincentive to go back to work. So Ireland has faced this issue as well. And that is that, so students who were working a very small number of hours previous to the pandemic actually were able to get what we called the pandemic unemployment payment, which was €350. Just today, Glenn, I mean an hour ago, about that it's been announced that is now going to be, it is going to be extended until April of next year, but it's going to be broken into 3 phases, and it's going to be dependent on the earnings that they had before, and also then people also have to re-sign up for it, and ultimately, of course, there's also a different scheme then to encourage people to come back to work. So can it continue? I mean, ultimately, of course it can. Fed can do whatever it wants. It can access the funds. So I think in terms of what's happened so far, whether it's right or whether it's wrong, it doesn't really matter at the moment. The country is where the country is, yours, mine, etc. So actually that money currently sitting in bank accounts can be used to stimulate the economy in the next period of time through what we call the marginal propensity to consume. And then similarly, it's also going to have to be considered how to make sure that people get what they need to do, like you mentioned, pay the bills, etc., but at the same time be motivated to go back to work. And that's going to be the challenge. Now, there's real disparity in Capitol Hill at the moment, how much it's going to cost. You know, $1 billion has been signed off on. Some people there of various persuasions say that it could take up to $4 trillion. That's an awful lot of money. So it's going to be, and of course, the other thing is that we're talking today, the 23rd of July. We're talking live here, Glenn. We don't know where this is going to be in a month's time. If we were speaking a month ago, our views might have been different on how long this is going to last and so on like that. So it is just important to take into consideration that the marginal propensity to consume can have a kind of a longer played out impact on the economy, which thus can feed into the cyclical stocks, the discretionary spends, also the stocks that are focusing on consumer staples that can really, really help those out. And then on the other hand, the government is going to have to consider, how do you balance taking care of people and encouraging them to go back to work, and of course, Glenn, making sure that they have jobs to go to as well. All of that is going to play into.
And that's the magic question. How do you have a balancing act for all three things? You know, getting people to spend money, getting people to go back to work, and giving them jobs. I don't think that we're going to have a lack of jobs. I think that the jobs are there. But with the advent of the pandemic, the jobs are not there right now. But I don't think that we've lost. Let me back up. Because of the pandemic, some companies go out of business. Some companies go out of business, jobs get lost. Totally understand that. But that's part of the focus of what the Fed is trying to do. The president's trying to put out something in the stimulus to make sure that the employers are taken care of as well, to keep them from going under. So it is a balancing act, but it's a balancing act that includes a lot of money, of which we're just printing. And I'll say, I don't always like to put my own opinion into this, but at some point in time, the printing press is going to not be nearly as fruitful as it was before, and we're just putting a lot of money. We're at a lot of our gross domestic product right now. The GDP, what we're putting in, we're so high, getting close into that gross domestic product. Gosh darn it, trying to get it out of my mouth. But there's a lot of money out there. There's a lot of money. At some point in time, you say to yourself, we got to pay this all back somehow. I don't think anybody's looking at that. They're looking at making sure that people are taken care of so that they can spur on the economy. As long as these people have money, they can put it back in the economy. If you don't have the stimulus, people don't have the money to spend. They don't have the money to spend. The economy can't grow. If the economy can't grow, what more can the Fed do? What more can we, It is a balancing act. All of this is a balancing act, and it is a magic question. How do you make this all happen? But, what's the analogy? How do you handle a problem? Or how do you eat an elephant? One bite at a time. And I think we're in that mode right now of, beyond trying to look way ahead, we're trying to take it one bite at a time. All right, so that's what's going on in the market overall. Well, let's go move on to the next story, which is, for me, is going to be coronavirus. Coronavirus is huge. It's a big story. Everybody's racing to get a vaccine. And there's an operation called Operation Warp Speed, where companies are getting to phase 3 trials faster than ever. And that's a good thing, but it's a scary thing. Because the reason why we have so much time to test drugs is to make sure you understand what the side effects are, what the ill effects are. But with Operation Warp Speed, the government is put behind and say, go, 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 go. And companies like Moderna are getting to phase 3 trials by the end of this month. That's unheard of, but we're trying to put a hold or slow down this pandemic as quickly as we can. And so these companies are running after a vaccine. And here's one story that talks about several different companies: AstraZeneca, Pfizer, Moderna, Vaxart, Novavax. For those of you who are part of our jockey club, we've made some money on these as day trades. This is still my stock of choice, Moderna. I think that they are very close in their phase 3 trials. I think this is going to be one of the first companies that come out. There's a company over in England and who says that they're very close. And then I just saw a story that Russia says they have it. They have a vaccine and that they're giving it to their high-ranking officials. It's news. I ain't calling it fake. I ain't calling it nothing. It's news. So I don't know. Don't get me caught up in that stuff. All right? It's just news. So people are running after it. And here's a few stocks that are talking about it. I'm only pretty much going to stay with the headline stories. We're going to analyze the stocks. And I have another one which looks at Pfizer and biotech. They get money from the government, $1.95 billion, an order already from the government for a vaccine. It ain't there yet, but the government is already paying for it to get this vaccine out there. We ain't playing games on trying to get to this vaccine. Again, there is a downside to this. As fast as we're trying to get to a vaccine, the normal testing process that we go through is not there. We're very anxious to get a vaccine, and I am a little nervous about the side effects that could come from this vaccine. I'm just putting my 2 cents into that. But vaccines to be provided to Americans free of charge. Companies didn't specify pricing details. That's huge too. All right, free of charge, whereas there's other companies out there saying we're going to come out with a vaccine, but it's going to be expensive. Well, if you're going to pay somebody that kind of money, they better put it out for free. That's what I got to say. If the government going to pay that kind of money, you better put it out for free. So I'm going to go into the software real quick. I want to go find those stocks. I have them in a watch list. That's not the one I wanted. Where's the one that I want? Is it this one, Joey? Which one of these did I want? Is it? Hold on. Joey's going to open up what I want. All right. Okay. There we go. That one. I'm going to go. We always create a watch list of our stocks that we're going to pay attention to this week. In the watch list viewer, I'm going to go to my YouTube Trending Thursday. Let's go to this week's stocks. It's going to be on 7/23/20. There we go. And the stocks that I'm going to look at for coronavirus, I got a lot of stocks in here this week. I had a lot of stocks to look at. But the stocks will be AstraZeneca. Actually, let's sort this by symbol. All right, do this again. I want AstraZeneca. There's the BioNTech. What else is here? Moderna, Novavax, Pfizer, Vaxart. I believe that should be at 1, 2, 3, 4, 5, 6. There's 6 stocks right there, Joey? No, it should be 7. Oh, I'm going to look at the Spiders Biotech ETF to help you within this space as well. So let's go look at all of these graphs and let's determine from their graph layouts which ones are possibly the better ones to look at. I always like to look at a 3-month graph because what happens every 3 months on the stock? Earnings. I always want to have the earnings picture in play when looking at a stock's price movement because earnings is the biggest portion of a stock's price movement. AstraZeneca made the story that they're getting that money. What's happening to the stock? Well, it's pulling down. We use moving averages, a 3 and an 8 exponential moving average. Stock is pulling down. I'm not saying that it's the right time to get into the stock. Thus the reason why we pull up the VectorVest software to look at the stocks as they've made the news to make a better decision whether or not you buy it. So a lot of times you see the news, you go, man, I'm going to go buy it, and then this happens. This is why we analyze a graph. Let's go to the next stock real quick. BNTX, nicely moving higher, pulled back today. Both of those stocks who are getting the money from the government, both pulled back. Very interesting that the government is backing them, but people are taking profits on those stocks as they are getting hit on big volume today. I'm going to go down to the next one. Moderna, my stock of choice. I've been liking it based on the news that it's getting closer to a vaccine more than any other stocks that I've seen out there, to include Johnson & Johnson. I wouldn't buy it today. Novavax, look at that equity curve. Look at that equity curve. Right now, as other stocks are pulling down, this one is pulling down, but in a sideways fashion. That's not a bad play. Watch RT on it, though. That's a telling sign. Even though the stock is going up, the relative timing or the short-term price trend of the stock is pulling down. That could be a telling sign. Pfizer, look at that. All of these stocks within that space are feeling the effects today. Interesting because the news should be taking them higher. Vaxart, another stock we've made money on when it was jumping up, pulling back. The 3 and the 8 are still bullish, but pulling back. Watch RT and the volume. And the last one is to play the industry as a whole. I like, this is a little twist. Instead of trying to buy into an individual stock within this industry, why not look at the whole industry in one ticker symbol, the XBI, which is an ETF, the spiders on the biotech. That may not be a bad play, and it will reduce you to it will expose you to a lot less risk because it's one ticker symbol looking at all of the stocks within that industry. If any one stock really finds the cure, or not the cure, the vaccine, this thing will take off because it's looking at all of them as a whole. Susan, anything you want to add to that in regards to that space?
Yeah. So yes, I've been watching what we're calling the Oxford virus. The Oxford vaccine, I should say. You know, very. This was all over the front page of the Financial Times this week, saying that the vaccine could be ready by potentially even Christmas. And I think, though, it's important to look at what is a vaccine, right? So is a vaccine something that makes me utterly immune to the to the virus? Because if we look at then maybe what could accelerate the progress towards that, obviously the trials and the FDA and the approvals. But number one is that the antibody tests, that's also something that's very interesting to watch, because if people know that they have been exposed to the virus, some people have been asymptomatic, but they've also not even felt it, then they could have the antibodies, and then that may make them, be able to not have to adhere to social distancing and so on like that. So if you could en masse be able to do that for a country, well then could you accelerate the economic recovery? And that has been something that the UK government has been looking into. So when you mentioned about AstraZeneca and the vaccine there, I think that it's just important to look at the ways in which this is also being looked at. The other thing, and this is why I'm particularly interested in the ETF route, is that there's also other ways of looking at this. If we could speed up recovery time, for example, if you could increase the amount of oxygen getting into somebody's lungs while they're in intensive care, if you can prevent them from getting from hospitalization to intensive care, all of those are really going to matter. Now, personally, I'm not a medical expert. I'm certainly not a biotech expert. But what I do know is that, yes, your government is pouring money into this. The European Union is pouring money into this. The UK is pouring money into this. Australia is, and on and on and on we could go. So personally, rather than trying to get exactly the right one, and you've mentioned some great stocks there. And like when I think of Pfizer was the very first stock that I ever sold an option on. It was trading at $15 and I got $80 for selling my first put premium on it. And I never learned so much about options as when I did at that particular stage. But the thing is that no matter what, we're dealing with one particular company and one particular way in which it's taking it on. So personally, I am looking at the ETF, looking to see are there ways in which to manage that. If you look at that beautiful comfort index that's on that stock there, right behind you there, Glenn, that's right up my street. I mean, after all, comfort index is an ability to withstand severe or lengthy price declines, and ultimately taking the whole lot together, I think would be quite a prudent move, and it's something that I'd certainly be considering.
And that was my twist this week in regards to this space. I love this space, especially from a trader's perspective. Our Jockey Club members have made a lot of money. One of the VXRT, we made 142% in a day, in a day trade. We made 142% in a day. So they do provide you with great day trading opportunities, because it's always news driven. But this was my twist this week. Instead of trying to play the individual stock, take a look at this XBI, which looks at the whole sector. Now, Jay asks, why not another index? I could have used whatever index I wanted, but I like overall, if I look at XBI, looking up, moving higher, I could also look at LABU. Jay put in, what was it? What other thing? IBB, IBB. There's a couple of different. There's LABU, looks a lot like what we just looked at. There's IBB. They all look alike. But if I'm looking at a price perspective, LABU is the least expensive. But I know that anything dealing, what was the one I was just looking at? Good Lord, have mercy. XBI. Don't give me the wrong one, Joey. I'm going to punch you. XBI. All right. They all are looking the same. Whichever one fit, whatever floats your boat, Jay. All right. Whatever floats your boat. I don't know what kind of boat you got, but whatever floats your boat, take whatever makes it easier for you. But I think investing in the whole space in one ticker symbol makes a lot of sense, especially with so many stocks or so many companies trying to go find that happy place or that vaccine. Normally, I would go look at my watch list for these stocks, but I think we've got enough stocks right here that are good enough to take a look at. I'm going to take a look at one other thing. Remember, we have an indicator called RV. For those of you who are looking for these stocks that have the best upside potential, how about Novavax? It's got an RV of 1.37. If you're looking at the safest one in this list, well, right back to what Susan said, AstraZeneca is a great stock. How about it's the safest out of the list? And then if I want to find out which ones are moving up the fastest, that would be back to Novavax again. So Novavax has got good upside potential. It is a little risky because the relative safety is below 1, but it's in an uptrend. And look at that C high of 1.5. This may be all around the best play for upside ability and moving up, growing their earnings at a clip of 27% a year, where even as good as AstraZeneca is, and I'm only just using the data from the software, they're growing their earnings at a negative clip. You know why? AstraZeneca puts a lot of stocks out. AstraZeneca puts a lot of stocks out. They've got to go through a lot of testing to get their stocks out there and done. Do they always make money on their stocks? No, but they keep pushing that money. Most really good pharmaceutical companies, a lot of them grow their earnings at a negative rate, unfortunately, because of all of the stuff that they have in the pipeline. All right, but Novavax growing their earnings at a clip of 27%. Vaxart, on the other hand, growing their earnings at a clip of 18%, but the only thing it's got going for it, as far as the analysis, is that it's going up in price. The fundamentals behind the stock are not there. So I still like the idea of going with an ETF to go with the whole space. All right? So that was that story. Woo! That was a lot of stuff going on right there. Woo-wee. All right, next one. And this is just for Susan. Holy smokes, there was a lot going on right there. All right. Let's get to our next story, which is about oil. The tug of war on oil between supply and demand. Yes. I've been talking about oil for the last couple of months, saying that it wasn't right to buy oil yet unless you're a little bit more aggressive. Why? Because oil contracts came out in, April, going March into April, where it was at a negative. The futures contracts were negative. First time it ever happened. And when that happened, people jumped all over oil, driving oil prices higher. But what did I tell you? I said the prices were going higher because people were buying it because it was so low. What normally moves oil is demand. Demand's not there. And we had a glut of oil. We had ships sitting in the sea holding millions of barrels of oil because we didn't have any place to put them. So finally now we're getting more into the digging in of the supply, and the supply is decreasing. Not to the point that we got full-on demand yet, but we are getting close. This story says OPEC and Russia-led oil alliance agree to increase production. Wait a minute. They were the ones that were saying, man, we got to put a stop to all of this because oil's getting killed. We're going to cut back on production to help drive demand higher. Well, even with that happening, they're still feeling the effects. And it's like, well, we're going to turn back around a little bit. That's the Southern accent. They said even in Russia. Imagine a Russian Southern accent. Well, comrade. I don't know how I could put that together. A Russian Southern accent. But anyway, they're at the point where we're gonna start to increase production again. An alliance of crude producers led by Saudi Arabia agreed on Wednesday to increase oil production starting in August. Officials in the group said amid signs that demand is recovering. So the demand is not there, but it's starting to come into place, recovering following the coronavirus-related lockdowns. All right, let's go to the next story within this. Oil declines slightly after surprise build in U.S. inventory. So I just talked about that we were going and getting out of the oversupply. Well, we picked up inventories in regards to our oil slightly again. That's going to help to build up supply. And at this point, in order for oil to really start to move, the demand has got to kick in. It's not there yet, but it could be getting close to that happening. And you notice that a lot of these stories, all I'm really interested is the headlines, because we're going to analyze the stocks. Anything you want to add before I go look at the stocks, Susan?
Yes, a couple of things there, Glenn. I actually have a position that I'm going to talk about after you talk about what stock you're going to talk about. So I'll leave the stock side of things there. Two things I want to mention. First one is, as I mentioned, I love when I get a chance to go over to you guys. And being managing director of VectorVest Europe, I've had the opportunity to be in several countries of the European Union, and I have not left this city, namely Dublin in Ireland, since I came. I think the last time I was on a flight was the very beginning of February. Now, I am joined by millions of people who generally travel an awful lot and that we can't anymore. That, I don't think, Glenn, is ultimately going to change a huge amount. Is that we have gotten used to our lives being Zoomified. We are used now to being on Teams. We spoke about Microsoft earnings earlier. I mean, you and me talk all the time on Teams. We talk all the time on WhatsApp, whether it's Slack, you name the channel. So we have to look at this from the point of view currently around the demand for oil and specifically travel. Travel is ultimately a huge demander of oil. The second thing that I want to mention is ESG. Right? It's three letters that we haven't spoken about yet. Which is environmental, social and governance. Now, I just want to give your listeners and your VB Nation an insight into this. I once did a Facebook Live for VectorVest, I think it was last November, where I looked into the money going into ESG ETFs. And what I found was that 52% of the money that's in ESG ETFs is actually coming from Europe, despite the fact that Europe generally only, I think, contributes around about 17% of ETF funds globally. So it's very hard to put together oil stocks and ESG together. So therefore, you're dealing with two fundamental shifts there. One is a societal one that is driving money. And then on the other hand, you're also dealing with the culture of how we do business in the world. Now, when you talk about the demand coming back for oil, yes. However, Glenn, we started off with a conversation about payroll. And remember, at the end of the day, it is people drive the demand. People and the businesses that they work in and the families that they drive and the holidays that they take. So if we are going to see a more protracted slowdown than we anticipate, or if we see lockdowns lift and then maybe be reimposed again, we are going to see a slowdown in demand for it again because people simply won't be traveling. So I would be cautious enough here. I really would be cautious on the way in which they were interpreting the demand for oil, because just like I saw as an Irish person, the demand for the property market just before the crash, is it fundamentally changed for half a decade. And we need to think about here, our lives have changed and things have become habitual. They really have. Habits will have dug in by the time all of this is over. So let's just be considerate of that. And yes, I've taken a position. I don't want to reveal what that is before you talk about what you want to talk about here. But certainly I would just note those 2 points, is that we're looking at once in a generation, once in a lifetime change when it comes to this market.
I look at all of that. I'm with you to a certain degree. I think that, and whether this is politics or not, I don't think that the people, the powers to be in regards to the big oil companies are going to let oil sit where it is. I know that's a little weird to say, but it is. And the demand does come from people. The demand does come from people's ability to go put gas in their cars. And the big part of that is travel. Airlines are getting smoked because of the whole pandemic. At some point in time, I think that oil will right now with the wheels spinning in the sand, that oil will catch hold. And I don't, even though we're in a different paradigm, even though we're in a different paradigm in our world, because of a lot of people liking staying at home. And if you like staying at home and you're not driving to work, the demand is going to go down. But somehow or another, I think that there's too many powerful people in the power to be with oil, that I don't think that you can stop oil from going back up. I don't know if it's going to go back to up to where it was. That's just a side note from within me. It's more not analysis, but a lot more of gut feeling from me. All right, so I understand what you're saying in regards to the demand. I don't know. I just this is more gut feeling than analysis. That's all. It's more gut feeling than analysis. And people are saying, well, who's hosting today? Hush. This is me and Susan, and I want Susan's input today. So leave me alone. We got this. I got this. She got this. Leave it alone. She's doing an outstanding job, and I love hearing the insight coming from others than somebody like me. You think Joey's going to give me this kind of insight? No. So I love her insight, and that's why I'm glad that she's on today. I got this. All right, so just letting that be known. I want her insight. All right, let's go to the watch list. That's right, Leonardo. Susan is great. Susan is being polite to you, Glenn. What being polite? She's doing what I asked her to do and what she wants to do.
I think that comment meant that you won't stop talking.
That I won't stop talking?
Yeah, you didn't let her talk at the beginning.
She did talk at the beginning.
Okay.
Did you not talk at the beginning, Susan? Oh, man. All right, fine.
You're doing just fine, Glenn.
No, that's Joey. Joey.
We're all good. We got this.
All right. Anyway, I'm going to keep on going. I hate you, Joey. All right, but in a loving way.
By the way, just to say to all of those people at VV Nation, Joey and Glenn are like this offline as well. Seriously, I talk to both of them quite a bit at the moment. They are really like this offline as well. It really is. It's great to see.
And I still want to say again, Susan, thank you so much for all of your insight on everything that you're adding to today's presentation. Big time. All right. And Michael says, gotta razz Glenn to keep him on the level. Listen, I'm always on the level. All right, folks, don't forget to comment, like, and subscribe. If you haven't already subscribed to our channel, please do so. Right below this video, you have the subscribe button. Please subscribe. Don't forget to like, too, especially if you like the comments, the content today. Please like, as we keep on moving. All right, so the stocks I'm going to look at today are WTI. Let me sort this. I have this sorted. WTI. I want to look at USO, and I got another thing going on today, which is different. I'm going to look at the volatility on oil to help you as well. That's something that I've never done in here, but I got a couple little twists going on. All right. The only one that has any fundamentals behind it is W&T Offshore, Western Texas, WTI. Fundamentally not sound. All right, and it's not moving up in price by way of RT. But if I look at USO, the fund ETF, I do have an RT of 1.59. It's definitely moving higher. Now, I'm going to put all three of these on the graph. All right, view the stock graph. I want you to see something. There's WTI again. Susan is right in regards to a lot of people are staying home. A lot of people don't want to go back to work. And you know something? I think that a lot of people can get a lot of stuff done while at home, a lot more than they can at work, where they could be interrupted a lot more. But the demand is not there. I've been talking. Here is where we had the March, April contracts expire below zero or in negative. That was the run. And I just said, you know, if you're a little bit more aggressive, you could pull the trigger on that. But overall, the demand wasn't there. Now, as we bounce off this level of support sitting at $2.18, we're now moving sideways on the WTI. Let's go to the USO, though. USO is coming up. Put this on a 3-month graph. Coming up. Look at that. Now, as that's going on, was there a split in this? No. I thought it was. Yeah, there's the split. That's what affected the volume down here because of the split that happened. A 1-to-8 split on 429. I thought so as far as the volume was concerned. So I'm watching the USO oil fund index, which is the futures on the commodity, rising but doing a little bit of a sideways move. RT is above 1 but also pulling back, which makes sense as the stock is moving sideways or the ETF is moving sideways. Now, here's the volatility on crude. Now, I'm going to do something. I'm going to close that out. How did I want to do this? I think I had that right. View the stock graph. But let's go put this on to something that we hardly ever look at as a performance graph. So WTI, let's take off the petroleum. What was the other two stocks we're going to look at? USO. USO, comma, and the OVX. OVX. All right. Notice that oil starts to move up as oil, let's go put this on 3-month graph. This is a performance graph. Knowing that the volatility on this industry is pulling down, all right, less people frightful being in this industry. What's going on with the WTI, USO, and in petroleum as a whole? All right, this is something that we hardly ever look at, but I'm thinking that this is another way to see if it's possibly the right time to be in oil. Just like you would do on the S&P 500 with the VIX. When the VIX is low, the volatility on the S&P 500 is low, the S&P 500 tends to go up. But notice that when the volatility was high, look at what happened to oil. That was back at the time when those contracts expired or they came out zero and below. Look at the volatility. Look at what happened with oil. Now, as time is going along, all right, we are going through our oversupply. Volatility is falling, whereas these three are rising. But as this is falling, you would think that you would see this rising a little bit more instead of pulling back. So this leaves me, just like what Susan says, I'm at a point of pause when it comes down to looking at these stocks right now. That indicator that I don't know how many of you have ever used, another little special twist today in looking at a possibility when to get on. I really would like to see the volatility of the oil index to fall, overall oil, and these indicators rising, whether it's on the WTI, petroleum as a whole, or on the USO. All right, that's a little something different that you get within the VectorVest software called the performance graph. Anything you want to add to that, Susan?
Yeah, there is actually. I just want to go back to a time when USO particularly, well, the oil price was negative, Glenn, right? You've mentioned that.
Right.
And I remember talking to my husband about this, I was saying, right, should we take on an oil stock? But it was like, if people remember back then, just like you said, I mean, we were looking at all these big oil tankers sitting pretty in the ocean, basically, and not able to go anywhere. And I said, while I know that oil is negative, I'm not 100% sure about where this is going. So what we did was that we sold put on XLE, actually. It goes back to your point about biotech. So we sold a position, which is the energy ETF, XLE, and I'm happy to tell you exactly what I did. I have the where we're at the moment right now in front of me. So I took in a premium of $4.75 per share on a strike of 36. So in essence, the volatility that you're talking about there, Glenn, rather than take on a position and just suffer it, we ultimately, by selling a premium on that, now at the time it was slightly in the money, by selling a put on that, I simply took that volatility and put it into the premium. Obviously you take on the risk that nothing is going to go crazy, but also I didn't put a spread on this because I would have had to pay for that same volatility as well. So as a result, it's expiring in August, third Friday of the month. I have got 29 days to go. I'll see how much, at the moment I'm going to see how much I'm going to wait until, probably won't wait till expiry. And as I am talking to you right now, the price that is trading at the moment is 105. So I'm up $3.70 on the share. And this is one example of an option, because there's been a couple of positions that have taken since March where I would have been better off simply selling, buying the stock instead of selling an option. But this isn't one of them. This is one where it's been volatile, pretty much traded flat within that volatility. So this was a prime example of get paid to take on the volatility. If people are going to stay awake at night, I personally think myself getting paid to take that on, particularly if I had taken on an oil stock or taken on XLE, if it was actually put to me, despite the fact that all of what was going on in the energy sector at the time, because it was really, really challenged, I would have been happy enough to take that. But as I say, I got paid to take that volatility at the top, which is great. And just before I go back to you on this, just Julian asked there, is Susan using US options or European? Julian, I do both, and I'm really happy to talk about some European positions that I've taken as well. But I do want to make one point, is that the contract size for both US as well as Europe is the same. So it's 100 stocks. In the UK, it's 1,000. And I noticed some people are asking me to share charts. I simply can't do that. Glenn is the guy in the driving seat, so I simply can't do that right now. Otherwise, it would look far too confusing between the two of us. So it's not that we're not doing it. We have considered that, but it's all about your improved and optimized experience. That's why we're doing that.
All right. Thank you for that. And, just the overall understanding from the oil perspective, the volatility is pulling back, but I'm not seeing the response as really rocking and rolling, with the exception of the WTI is outperforming all of them right now. I would really like to see these start moving up with a little bit more alacrity. I think that's a good word. If it ain't, I'm going to say it confident. With a lot more alacrity, and then I'd be ready. I'm still not super duper ready to pull the trigger on oil yet. I just need that demand to be there. Susan gave some information or some analysis on why the demand might not come back ever. I'm thinking, or not come back real soon, because we are at a different paradigm in our market right now. This is a different change. Just like what happened back in 2007, 2008, the paradigm of the market changed. And I think we're going through another paradigm change right now. And I think more people are going to be in tune with doing a lot of things over Zoom. I do it for church. I do it for a lot of different things. And is it going to become the mainstay? Don't know. But will it greatly increase from where we were prior to the pandemic? The answer to that is yes, it will. All right, so we'll see what happens with demand. I still am a big feeler of demand's got to be in place to drive oil back up, and we'll see how that all comes up. But check out that OVX, the volatility on crude oil as well. We're sitting at about 305. I've got a couple of stories to do. I'm only going to do one more. It looks like I'm not going to do my stocks of interest today. We've gone a little longer, which is fine, but I am going to do my gold silver plays today. All right. Don't forget to comment, like, and subscribe. And don't forget, Susan, do me a favor. How can they reach out to you, or how can they link up to Fantastic Female Fridays?
Thanks, Glenn, for asking me that. So first of all, if you subscribe to the channel, and I know a lot of VV Nation have already done that, then you will know, you will be able to see when the show is going live. But also, if you search for Fantastic Female Fridays and also put a notification on, you can click to get a notification when we go live tomorrow at 12 noon. That can also work as well. And then the last way is to go to vectorvest.com/FFF.
There you go. Thank you for that. I wanted to make sure that they could do that, and we put that out there. All right. I'm going to get to my next story.
As you're doing that, Glenn, I am loving the comments about all the Glenisms that's out there. I love holy smokes. I didn't know we had paradigms and upsideness. I'm learning a whole new vocabulary there. I'm really enjoying you here, VV Nation. Thanks so much for having me, Glenn. I'm enjoying this.
You're welcome. I got a book. I'm going to have to email you a PDF. I've got a book of Glenisms that a customer made for me. I'm going to have to email that PDF to you so that you can catch up on all my Glenisms. I got a lot of them. All right, mugosity. That is a Glenism if there ever was one. Wow, really? All righty then. Y'all need to stop typing mug in the room. Oh my gosh. All right. With that, my next story is going to be on gold silver. It's a combination of the two. Here's a story. Alaska Gold Mines, 2019 actual and 2020 forecast production. The crux of this story is that there's a lot of gold in the ground that they're ready to pick up. And they are trying to get to the point where they can start picking it up. All in sustaining costs of proven probability reserves for each gold mine are provided. So the story in essence really talks about their ability to go get after all of this gold. There's a lot of it. They can go get it. It's going to help to drive the gold prices up right now. I'm going to do a couple of different things. I got a lot of twists today. The next story is on silver. Silver finally smashes through the $20 ceiling. I walked through how both gold and silver are uptrending for similar reasons. And in this not essay, commentary, I give you the highest levered junior silver producer you can find on the market. Well, that's what he does. What I'm going to do is I'm going to look at both industries as a whole to help us to make a decision. But silver jumping up as much as it has, gold still running. I'm going to talk about what makes gold run. All right, so I'm going to, in here, I have stocks that I'm looking at. Hold on. EQX is a great gold stock. We're going to look at that in a second. I've got a volatility index now on gold, just like I did for oil. I've got a volatility index for gold. I don't know if you know that was out there, but it is. What else am I looking? A good silver play. Oh, what else is here? Oil. What did I have? I had, the dollar. I got to talk about that. And GVZ. 1, 2, 3, 4. Those are my 4 stocks. All right. So there's a couple of things I wanted to spend time on this for. All right. Equinox Gold, beautiful equity curve, good upside potential, a little risky with RS below 1, but great in moving up in price. Not only that, growing their earnings at a clip of 47%. And there's an indicator, as Susan says, CI at 1.72. This is a great gold play. It's relatively inexpensive for those of you who may not have a lot of money in the market who want to get into gold. I'm going to come back to GVC in a second. Another great silver play, PAAS, Pan American Silver. Good upside potential, a little risky with RS below 1, but look at the RT on it at 1.78. And a CI at 1.66, growing their earnings at a clip of 25%. Here's 2 good plays for precious metal. EQX for gold, PAAS for silver. Now, let's talk about what's helping the gold to go up. The reason why gold wasn't going up for a while is because the dollar was still strong. With all of the stimulus that's coming out, the dollar's starting to feel the effect a little bit. We're going to take a look at that. But normally, the general correlationosity. There you go. The general correlationosity is that when the dollar falls, gold goes up. All right. And so I'm going to take a look at UUP, which is the dollar. I'm going to highlight, all of these are highlighted. Going to view the graphs on these. All right, gold, EQX, an excellent upside potential on the stock, 3 and 8. Stock is moving a tad bit sideways right now. Do watch relative timing. I like that the volume has been pretty steady, and I am a big fan of volume is conviction. As long as the stock's price is going up, I'd rather see the volume going up than not. All right, the next play was on the volatility. I'll come back to that in a second. Here's a great silver play. PAAS definitely moving higher. Down day to day, but 3 and 8 still in place. RT in play, and the volume is starting to actually rise over the last month or so. All right. And then the last one I had is, this is a good reason why gold is starting to go up. Look at the dollar. The dollar's falling here, and I'm going to put this again on a performance graph. I'm going to go to graphs. I'm going to go to change to a performance graph. And again, we don't use this nearly as much as we should. But I'm going to put on EQX, comma, PAAS, comma, UUP, comma, GVZ. Let's take a look at all of them. Highlight them. I don't want the VVC. I'm going to take that off. All right. Big thing I want to start off with, put on a 3-month graph. What's the biggest performer in here? Both of them, the silver play and the gold play. The silver play is outpacing the gold play right now. And notice that when I set up a performance graph, everything starts from the 0 value. It's not tracking price, it's actually tracking performance. How much further up or down compared to each other. All right, that's it in a nutshell. From 3 months ago, silver's outperforming the EQX, but both of them are outperforming the dollar. Now, as the dollar starts to fall, look at that. There's UUP. All right, that's that dark mustardy color.
Hold them up.
I got to bold them up. Oh my gosh, Joey. Let's bold them up so you can see them a little better. Hold on. I'll do this real quick. EQX, change style. We can do this on the fly. How cool is that, Joey? PAAS. Oops. Right. Oh, I got to check it, though. Check it. There we go. Change the style, make it darker. And one more. The UUP, nope, it's GVZ. Check it. Right click. Make it darker. Hopefully that makes it easier for everybody to see. Notice that gold starts rising as the dollar starts falling. The dollar continues to fall. Gold and silver start rising. Now, interesting as you watch the volatility, which is GVZ on the gold, as the volatility falls, gold is rising. This is a telling sign right now. Look at the volatility start to jump up on that. Right now, if you're in your gold and silver plays, just be careful. That's all I'm saying. Just be careful. Volatility is starting to jump up on them as of right now. Again, a lot of this analysis is what's going on behind the scenes. You get to looking at this, man, these stocks are going up. I'm going to go buy it. Yay! Oh, but wait a minute. I got something telling me that volatility on this group is starting to rise. All right, starting to rise. If nothing else, if I'm in these trades, be a little careful. They are running, but this is, again, another little twist. I still like, even though volatility is rising, I still like that the dollar is falling, helping to drive these higher. Just keep your eye on that whole volatility thing. So that's another little twist. A couple little things to give you some food for thought. Susan, do you want to add anything to this?
I do.
Okay.
I do. And just as a couple of people mentioned there earlier, an Irish woman will never not take up the opportunity to share thoughts on anything. Okay, let's think about this gold and the US dollar, right? If the dollar is falling, that means that inflation in the US ultimately has to rise, and that is because what America buys in from outside is going to cost more if the US dollar falls. Okay, so what does that mean? Well, then that means that there will be inflation. And what does that mean? Well, inflation usually means an increase in demand for gold. So let's put that together and let's look at one of the parts of the markets. Generally, of course, we do look at, in this show, Glenn, you're going to look at stocks, you look into currencies, but let's just look at bonds for a moment here. Treasury inflation protected securities, called TIPS. So TIPS bonds are ones where these bonds enable people who buy them to track inflation. And there has been a record amount of money going into those over the last while, to the point of where they're actually being pushed into negative yields themselves. In fact, more than 5 billion went into these funds in the week ending July the 8th of this year. So the thing is that what's going on here is that people are anticipating inflation. Really, the question is, are they correct? Now, we could look at this in a couple of different ways. Are we expecting inflation? We expected last time, by the way. We expected it the last time that central banks pumped money into the economy. Now, it pumped it into the economy and it arrived into the stock market. That is why, if you look at the S&P 500, the SPY, let's say 10-year graph, you can see that it moved at a different pace to the US economy. It was actually out of lockstep. And I could get into how that happened, but let's just take it as a given. But why was it that inflation didn't happen? Why was it that it didn't happen in the UK? It didn't happen in Europe. It didn't happen in the US. It didn't happen at the level that was expected. Why not? It was because it was being sucked up by the various different rates of debt, household, government, and company, that had formed in the lead up to the crisis. That's not there this time, Glenn. That's not there this time. So the fact of the matter is that it seems that investors believe that we are now heading into an inflationary environment. That causes a problem for governments when they're trying to plan what to do, because if you haven't got the growth driven by what we've been speaking about at various times throughout the show today, and you have got inflation, you're stuck with what's called stagflation. And that has been an issue that the UK has been facing since Brexit, for example. Since the sterling declined in value, you had inflation there, but it was stuck without a huge period of growth. So let's come back to gold now, is that I think that in order to watch what's going on, if you want a predictive indicator when it comes to gold, take a look at TIPS. Now, a couple of people there mentioning SLV. You mentioned there yourself, Glenn, about Pan Am Silver. I remember selling puts on Pan Am Silver, and it was really a great stock to be selling puts on because you got great volatility in, and the stock generally, while it did go up and it did come down, I'm looking at it, it's the same price now as it was when I was selling puts in it a long time ago. And SLV is the more volatile cousin of GLD. GLD, I thought, was a great way to get exposure to gold, but certainly if you're an options investor like me, there's no point selling puts in it. You weren't going to get anything. You're better off simply buying the stock. But I just want to tell you this brief story. 2011, Glenn. 2011, I was selling puts on SLV. I was selling puts January, February, March, April. And it was my first time as a naive options investor that I saw a curve going parabolic. And you know what it's like. If a curve goes parabolic, you know what happens next. But if you haven't seen parabolic before in your actual account, you don't quite know what's coming next. So it just looks like this is getting better and better and better and better.
Until it don't.
Until it don't, but not alone that. If you're selling options on it, ultimately, of course, the acceleration of the price change is even worse. So when I see SLV, I think, oh my God, I think back to those days when SLV taught me one of the, I suppose, best lessons that I could have learned in the markets at the time. But overall, if we bring this back to basics, potentially, yes, we could see inflation. It's hard to see how 12 years of printing money in an environment where this ultimately has been spent, and of course where companies have bought back stock, like I mentioned before. And the other thing as well is that you're dealing with an awful lot of companies that don't really have a place to put their cash. Bond yields are offering nothing. Of course, what we haven't spoken about, and we could do certainly in the future, is looking at the future of property from the point of view of real estate and REITs and how that fundamentally changes. Somebody commented there a little while ago about, is that something that would be worthwhile to look at in the contrast of e-commerce and different type of platforms like that. But the point I'm making here is that we always need to ask, where does money go if it's available in excess? And that is what has been happening in a certain portion of the markets over the past couple of years. And where that money went was buying back stocks, which fundamentally reduced the number of shareholders it reduced the number of shareholders that earnings had to be dispersed about, which pushed up earnings per shares, which pushed up the share price. What happens this time? And is it the case that in this occasion that it could be consumers that ultimately drive the real economy, and therefore we might see a longer, just going back to the marginal propensity to consume that I mentioned earlier, is it that we're looking at that type of a scenario which would drive inflation? And by the way, of course, if inflation happens, well, then you have got wage inflation and you've got all of that good stuff. The problem is that if you're trying to manage growth at the same time as you're trying to manage inflation, then, as I say, you've got a difficult position, and it's not good. It's certainly not good for the stock market either. So that's what I'm watching. That's what I'm taking the temperature on. Personally, I haven't taken a positioning in gold or silver. It's not something that I'm currently looking at right now, but I'm watching tips to see where this is going to go.
Man, I am so loving all your insight. I really am. And I think VV Nation out there is liking your insight as well, or loving your insight as well. Someone asked me to be able to move this performance graph back further. I can go back as far as I want and look at all of these indicators in here as much as I want. So question came up is, Susan talked about inflation. I put the CPI VV below the value of 1. Inflation's an issue. No matter what the government tries to tell you, it's below the value of 1. Cast on a scale of 0 to 2. Inflation's an issue. Inflation means that people have to spend more money for products, or spend more money, takes more money out of the companies and things of that nature. So inflation is, out of the 3 things that move the markets, earnings, inflation, and interest, interest and inflation are the bad guys. Interest rates are still at historically low lows. They still are. But inflation is starting to become a problem. No matter what the government will say, or actually the Fed will say, well, no, it's still well within where we want it to be. Well, from our perspective, how we track it on that scale between 0 and 2, the CPI VV is at 0.58. Look at the fall. Look at the fall. Remember, any indicator of cast on the scale between 0 and 2, above 1 is favorable, below 1 is unfavorable. Inflation is unfavorable right now. Here's that S&P earnings VV. Here's why we're in a bear market. The earnings on the S&P 500 is falling on that scale between 0 and 2. And here's our S&P earnings actually falling as well. So I wanted to bring that in. Since Susan brought up inflation, I wanted you to see that you can find that stuff in the VectorVest software. For anybody who's asking how to bring up a performance graph, go to a graph, change it from a stock graph to a performance graph. That's how you add, and that's how I'm adding some of these things to be able to compare them to give you some further insight. For those of you who are not subscribers to the VectorVest software, you have access to all of this. You do if you click the link that Joey's going to put in there to give you the trial to the VectorVest software for 30 days for 99 cents. So today's presentation did give you a little bit of other insight, a little differently than I normally do, on looking at volatility on oil and on gold, and looking at the dollar and how it affects the gold, and looking at that volatility on the gold right now as it's starting to bump up. Just be careful with those positions. And again, all of the insight talking about what's going on. In case you didn't know, folks, Susan is an economist over in Ireland. And, this is why I wanted her insight. She's really good at knowing what moves markets, what things we need to look for to make markets move, and understanding what the jobs number was all about and how that's affecting, and putting money back into economies and how that's affecting. And is this a real movement in the market, whether it's induced by investors or if it's by the Fed? In our case, I think that right now our market is a Fed-induced market. It's the Fed throwing money behind money to keep the market going. We're still trying to help our people with the stimulus, but are they really putting money back into the economy yet? Well, if you're not opening up, if you're not really opening up, or you partially opening up, are they going out? Are they spending money? All right, are they spending money? Are they really driving the economy? But I think that right now we have a Fed-induced economy. Man, we're sitting at about our 90-minute mark. Today's stocks of interest, I won't take a look at today, and I apologize for that. But I was no way that I was going to cut Susan short on anything that she was talking about today. I not at all. I wanted all of that information, and I wanted you guys. Shut up, Joey. I wanted you guys to have that information as well. So tell you what we're going to do. Susan, any closing remarks before you go? And then after you're gone, we're going to do a quick fire of people's stocks. So the floor is yours in regards to Fantastic Female Fridays or anything else you want to put as far as closing remarks before we go.
Okay, thank you. Thank you, Glenn. One stock that I want to put to you all, and that is that the highest VST stock in the European database at the moment is ASM International. So it is an industrial, and it basically produces the things that goes into computers and that goes into smartphones and various other things, etc. So over the past couple of months, I have been taking some trades and investments, both. Somewhere I've been looking at just, taking a bottom fishing approach, looking at RT, looking at a change in RT and using that to drive some decisions and various other different things. But I just went back to basics a couple of weeks ago, a couple of months ago now, and I sold a put on ASM because it was the top VST stock. And I closed it last week. I'll be writing about it in my view shortly. Closed it last week. And I had taken about 92% of the value off the table. It wasn't expiring until the end of the third Friday in August. As I say, I didn't really want to be hanging around waiting for that. The price had gone well past the strike. Anyway, so just want to let you know that I went in and I had another look at the stock, and just a couple of statistics on it right now is that the CI is over 1.6 and has been for quite some time. It was at €39 at the start of the year. Right now it's at 145. The quarterly results are happening next week on the 28th of July, next Tuesday. The earnings call is the next day. And the earnings over the past 12 months have gone from €3.97 to €6. So that certainly is one that I have been interested in. So I sold another put on that over the last while. Again, I typically go out of the money in a market like this. I wasn't earlier on, but I typically go very, very close to at the money, I love a good juicy premium coming from a position of where it's got good strong volatility, and then basically what happens is that I just kind of leave it go, and I leave it run up to the date of I don't leave it go until expiry. I take it off the table beforehand if it's gone higher. I just see there just one comment there. Somebody said about you can't close them until expiry. You can if you're buying or selling them, of course, but you can't have any early exercise. So just wanted to mention that. So top BST stock in Europe has been one to watch over the past while, and just wanted to mention that from a European point of view. And finally, Glenn, it's been my first time to be on Trending Thursdays for the full duration. I know, of course, that you're going to get into analysing individual stocks for everybody from now on. So I'm gonna leave it here. But thanks so much for giving me the opportunity. Thank you very much to VV Nation for such a warm welcome, and thank you to VectorVest broadly for having me as part of the family.
Well, I look forward to doing this again and again and again. I still can't express to you enough how valuable the input that you've given today reaches, besides just to me, but to all of the people that are in VV Nation as well. So I definitely look forward to doing this again. And VV Nation, I need you guys to support Fantastic Female Fridays. I want you guys to reach out to your wives, your aunties, your grandmas. Well, you can hit grandmas. Grandmas to your grandmas, to your sisters, all that kind of stuff. I know that I've got a couple of people from the Jockey Club who simply love your Fantastic Female Fridays, and it's well worth it. Just listening to what she had to present today is just the tip of the iceberg on what she does every other Friday here on our YouTube. So that's right, folks. Make sure you put your likes up today. Please do. The content here was, bar none, some of the best that we've had here on YouTube. So make sure you hit the like button. For those of you who have not subscribed to the channel, please do. Don't forget to hit the bell icon so that you will be alerted to any new content that goes up. But we're growing this platform. Susan is going to play an integral role in helping to grow this platform as she picks up a lot more subscribers as well. So with that, Susan, thank you so much for being here. I look forward to doing it again. And with that, you have a wonderful day.
Thanks so much, Len. Take care. Bye-bye,
Right.
VV Nation. See you again soon, and see everyone tomorrow for Fantastic Female Fridays.
Excellent.
Okay.
Bye, Susan.
Bye.
Joey says bye. Why don't you say it loud enough so she can hear it?
She heard me.
Oh my gosh.
Gotta stop talking.
Wow. All right. So now, from the last few minutes of the session today, if you type your stocks into the room, now you can type them into the room. Joey will tell me what stocks he wants me to add to the graphs. Will you stop that? Will you stop that? What stocks he... Stop, Joey. He's messing with my mouse. What stocks he wants me to add to the list. So, Joey, it's on you, bro.
All right, so we got one from somebody earlier, PFSI.
PFSI.
Yep, he wanted that in there
'Kay.
before he had to leave. I told him I put it in there. Let's see, WKHS.
Workhorse.
Michael Bryden wants about 50 stocks analyzed.
Okay, then.
DTIL.
DTIL.
COCP.
COCP. Ooh, COCP.
Yeah.
Okay.
AMD.
COC. Gosh darn it, Joey. COCP, comma. What up?
Let's see, TNXP.
T.
Try to get some from some people I haven't seen here before.
Okay, he's trying to get some from some new people he hasn't seen before.
SAVE.
SAVE.
People keep asking about WIZD, so you got to get that taken care of.
Okay, I sent that over to Angie. Well, it's okay. You need to be a little Iron Intel. You need to be a little faster, Joey.
Well, they stopped typing. I don't know where they went. Everybody's taking a nap. I got your desktop muted because Susan was here.
Oh.
Now you can punch me. Now you can punch me.
I did.
No?
It's not working.
Is it off?
I don't know. Keep going.
NOK.
Nokia. NOK.
XSPA.
Said it?
XSPA.
Gotcha. Okay.
And NLOK. We'll stop there today.
Spell, what's the symbol?
NLOK.
NLOK. All right. Here's the stocks that I have. I put this on a 3-month graph. All right. As you know why I look at 3-month graph, because earnings plays a role, the biggest role in the stock's price movement. So I've got that set up.
Let's get you over here.
What did you do?
I'll put you on.
Oh, my gosh. All right. Can I? It's not working. What did you do to me?
I turned it off.
Why did you turn it off?
You don't need it.
Oh, man. Turn off my son. Hush up, leave me alone. PFSI, over the last 3 months, nicely moving higher. Love that the stock found a form of a base, bounced off 3A, crossed again, still moving up. A little bit of a down but up day today, hitting a new 3-month high. Watch volume just a little bit. Watch volume. You really did turn it off. I hate you.
It's on now, isn't it?
Oh, no. Anyway. And hitting a new 3-month high. If you own it, leave it alone. If you don't, I would wait until the stock goes 12 cents higher than the high. All right. Workhorse was a beautiful moving stock, rising volume, found a level of a high. Right there was a little bit of a shooting star pattern where the wick, a lot of bearish pressure was on that candle, followed through. Stock's price fell. Now sitting at that was Joey's hand, everybody. Why did you just put your hand?
Because they said they needed me on the screen, so I put my hand.
Wow, Joey put his hand. All right, stock's moving sideways. If you own it, let your stops manage to trade. It's bouncing off support, but moving sideways. RT still above 1, falling a little bit. If you own it, leave it alone. If you don't, and if you own it, wait for the 3.8 to cross bearish or break through this level of support before you pull the trigger and get out. All right. If you're not in it, I would really like to see the stock get out of its own way, get higher than that high. Next one, man, DTIL, Precision Bio. This is probably one in the coronavirus space. 3 solid days of falling down. The 3 and the 8 have finally crossed bearish. Earning, relative timing falling. I'm not feeling this right now. And actually, let me give you a saving grace if you're still in it. I do have a level of support. Let's use the bodies. I've got a level of support sitting right about 750. Let me make that a little darker. That's your line in the sand if you're going to hold it. All right, if you're in it and you're going to hold it, your line in the sand, if it breaks below 750, you need to seriously consider getting out of it. And also notice that as the stock is moving sideways, the relative timing is pulling down as well. Another, if RT pulls below the value of 1, you probably want to get out of it as well. COCP, another drug biomedical, definitely moving higher. Big down day, that is a 1 black crow. Piercing pattern with some follow through as the stock's price is pulling back. The 3 and the 8 are still bullish though. That's probably my first sign to get out of it on an end of day basis. Let's see if the 3 falls below the 8. And then if you want to give it a little bit more room, you do have a level of support. You do have a level of support sitting at about $1.55. But on an end of day basis, I'd probably look at the 3 crossing below the 8. RT is still above 1. Stock's still in an uptrend. Beautiful equity curve, about 1.5 months out of the 3 months, but just watch it now. Let's go to the next stock. Wow, AMD, nicely running. Got out of the channel yesterday, broke out of its channel, big up day. I do have a breakthrough follow-through. I do have 1 full candle above that level of resistance after it broke out, but it looks like right now it wants to test this formal level of resistance, which is now a level of support at 58.81. Let's see if that level can hold and see if it can bounce back up. RT is still above 1 with today's action. It is pulling back. Volume is pretty steady for the most part, but if you're in AMD, today is just a down day, and 1 day does not make a trend. If I'm looking to get into it, though, I need to wait for it to go above that 3-month high, which occurred today. TNXP, this is an extremely volatile stock. It's a low dollar stock that's very volatile. Wick selling pressure. Big wick, more selling pressure, followed through. Shooting star pattern, followed through. The 3 and 8 are still bullish, but I'm just looking, do you have the intestinal fortitude to sit through these swings on a lower dollar stock? If the answer is no, leave it alone. If the answer is yes, and you still see that the 3 and 8 are still in place, RT is above 1, volume is still at right at its average volume, then leave it alone. That's a lot of move in a low dollar stock. This is strictly speculative. It's way more aggressive. If you can't handle these swings, you don't need to be in the stock. But from an end of day perspective, the 3 and 8 are still bullish. If you can handle these swings, leave them alone. All right. Save, Spirit Airlines. All of the airlines are getting beat up. They really are. Because of the pandemic, they're not flying anywhere. United Airlines, Hawaiian Airlines, Spirit Airlines, they're all Southwest Airlines, all of them. I was going to do a story, but we were running out of time today. It's all right because we always got next week. It's okay. All right. But in that whole airline space, right now the stock is leveling off at a base or a level of support sitting at 1610. Believe it or not, even with them losing as much money as they are actually holding on to that level of support. But a good telltale sign, if it breaks below, that means the airline is in deeper trouble than they're even reporting. But interesting, that is tough and rough, a life that the airlines are having. That level of support at 1610 is holding on. Very interesting. All right. Intel, it's a very good stock. Just look at over the last 3 months. The opening price 3 months ago was $59.04, and right now it's at $60.50. The stock is in a dead sideways move over the last 3 months. There's no ifs, ands, or buts about it. It's there. It's in a dead sideways move. I'd rather you be in a stock that's either moving up, taking advantage of it to the upside, or moving down, taking advantage of the downside. As much as I like Intel because it's a good name in the stock market, it's just moving sideways. That's it in a nutshell. It's moving sideways. Next stock, Nokia, moving up, found a level of support, still moving in a little bit of a sideways fashion. It's got a level of support sitting at $4.07. Big down day today, but if you're in it, because the 3-8 cross, one day doesn't make a trend. The 3 and 8 are still bullish. The average volume is hanging in there. Stock is still in an uptrend. It's still a buy recommendation. One day doesn't make a trend. Use your stops to manage the trade. You're probably still in it. If I'm looking to get into it, I'm not ready to get into it yet. All right, next stock, man, XSPA. Big move today. I wonder if this is news driven. Let's take a look at that real quick. 15% press release. Oops, there it is. Press release 17 days ago. 24 days ago, provides business update. I don't know. Nothing is telling me anything I like. Why XSPA stock is trading higher today? That was 16 days ago. I don't know what's making it move up today. Nice update. The 3 and 8 are about to cross. Now, what I would look for in this, if I really want to be super aggressive on it, well, I could trade off the 3 and 8. The 3 and 8 are crossing today. I could jump on board. If I want more confirmation, let's wait for this relative timing, the short-term price trend of the stock, to go above 1. Could I be leaving money on the table at that point? Sure, I can. But I'm getting more confirmation of the upward move. But if I want to look and say, man, today it's nicely up, 3 and 8 crossing, boom, I buy it now at about 355. The high over the last 3 months is sitting at 711. I got some room, then I can make money. All right. So the aggressive way, trade off the 3 and 8 end of day, which will happen today. Or if you want more confirmation, wait for that relative timing to go above 1. All right. In the last stock, NLOC, it's not doing much of nothing. The same kind of stock, and looks like it's in a dead sideways move over the last 3 months. I'm not feeling it right now. I see the 3-8 cross upward move today. Look at that big wick at the top. Stock jumped up today. A lot of selling pressure with the big wick. Even if you're in it today, be careful. That's a lot of profit taking. I don't know what news is driving it, but that's a lot of profit taking. I'm just reading the graph. All right, All right, Joey left. I don't see my chat, so I can't see what you guys are saying. But number one, thank you all for being here. I appreciate that. If you like the content, please hit the like button today. I don't know how many likes we have, and Joey left. Let me see his computer. I'm taking his computer. Let's see. How many likes do we have today? I can't see. How many does it tell me? I've got 66 likes. Before I leave, let's get us up, if I can. Let's get us up to, it says 130. Mark says 130. Let's see if I can get up to 175 before I leave. See if we can get up to 100. I can't see any of the stuff over there. Let's see if we get up to 175 before I leave. Let's make it happen. All right. If you're new to the content here today, please don't forget to subscribe. Don't forget to subscribe. Wow, Kirby says 275. Is that for real, Kirby? No, stop, Kirby. Man, Kirby, that's messed up. Man, that's so messed up. Here's your computer. That's messed up, Kirby. My heartbeat was pumping up. My heartbeat was pumping up. All right. Stop typing mug in the room, not giving up mug. I'm going to see if we can hit 175 before we leave. If we don't, we don't. But today's content was awesome. Can I get an amen for that? I'm asking for an amen. Can I get an amen for that? Today's content was off the hook good today. All right. Susan was amazing. She's always amazing. I love when I can have her on YouTube. All right, I really do. She is truly an amazing individual who knows her stuff, and I want you guys to please support her on Fantastic Female Fridays. All right, why can't I see the like button? I don't know, because maybe you pushed it once. If I want you to hit the like, where's the like button? Glenn, any way to get advance notice of sessions like 30 minutes versus current right at the start? Michael, it was my fault. I was told about it a couple of days ago. I didn't know that it was final. I didn't know it was final until today. So that was my fault. I didn't know that it was final, that she was going to be on today until today. All right.
I think it just means Trending Thursday in general, but I don't think there is a way. You'd have to set like a.
I have to set up a different.
Phone
or I could send out another alert at an early part in time in the day. Do you guys want more than one alert before Trending Thursday? I only send out one alert, which is just as Trending Thursday is going to start. Do you guys want a second alert before Trending Thursday starts? Just let me know. I think the one alert is enough. Just to let you know that it's getting ready to start when it starts. You guys should already know. It's every Thursday at 2 p.m. All right, every Thursday at 2 p.m. Yeah, we had a call, CALX, on the Monday sessions about the Derby. That was a good trade, like an hour before. Let me see if I can. Set up a second alert prior to we start. I'll see if I can do that. And Steve is like, one alert is enough. That's what I think too, but we'll see. We'll see. All right, with that, folks, I want to say thank you for joining me today. Don't forget to comment, like, and subscribe. Please subscribe to the channel. Please subscribe to the channel. I want to see that happen. That would be awesome. And with that, I'm done. My voice is a little tired today. It's all right, but I got everything done that needed to be done. Adios, arrivederci, ciao, au revoir, sayonara, shalom, salam, and namaste. Peace, we're out of here.